Welcome to the Roy Morgan Weekly Update. Last week saw some big economic news with Treasurer Jim Chalmers handing down his first federal budget last Tuesday. The budget was generally well received, although there was not a lot of excitement and no big spending promises as we face the highest inflation in decades. And on that front, the following day, the ABS released their inflation numbers for the September quarter, which came in at an annual rate of 7.3%, the highest for 30 years since 1992. So how have these impacted the key indicators that we follow each week at Roy Morgan? Well, the first indicator to look at this week is primary voting intention. And after the Albanese government's first federal budget, support has increased for Labor at the expense of the Coalition and also the Independents. Support for Labor was up 1.5 percentage points to 38%, while support for the Coalition dropped 0.5% to 37%, and support for the Independents dropped 2 percentage points. Support for the Greens also increased, up 1% to 12%. A look at the key weekly indicators shows this rising support reflected also in the two-party preferred support. ALP increased 1 percentage point to 55.5 on a two-party preferred basis, well ahead of the Coalition on 44.5%. A look at the key measures of confidence shows a mixed picture. The latest government confidence, whether people think the country's going in the right direction or the wrong direction, increased 5 points to 107, following Treasurer Jim Chalmers' first federal budget. However, the key measure of consumer confidence, the ANZ Roy Morgan Consumer Confidence Index, didn't perform so well, dropping 1.2 points to 79.9. This is now down for a fifth straight week. A look at the longer-term trends shows consumer confidence is now at its lowest since April 2020, during the early days of the pandemic. This is in fact the first time consumer confidence has dropped well below the key mark of 80 so far this year. The key reasons for the decline in consumer confidence are clearly rising interest rates and rising inflation. A kind of visible reminder for inflationary pressures is petrol prices, which are now averaging $1.85 a litre, the highest they've been since mid-July, and up over 20 cents per litre since mid-September. Inflation expectations are also soaring. As you know, each week Roy Morgan asks ordinary Australians all the way across Australia what they expect annual inflation will be over the next couple of years. And this week, the measure soared, up another 0.5 percentage points to 6.6%. This is the highest they've been all year, and in fact the highest this measure has been for over a decade, since Feb 2011, but still a little lower than the ABS real numbers. However, even inflation expectations, which look at the expectations over the next 2 years, haven't kept pace with the official inflation figures, which were announced last week, as I said, at 7.3% for the year to September 2022. So these results indicate that Australians expect inflation to moderate over the longer term and not continue increasing at the current rate. A look at consumer confidence by the key metric of housing status shows where the declines have come since the Reserve Bank began raising interest rates in early May, nearly 6 months ago. Since that time, as we all know, consumer confidence has fallen 16.6 points overall to 79.9, less than 80. Clearly the biggest fall has been for Australians paying off their home, those people with a mortgage. Their consumer confidence is down a massive 28.9 points to only 72.5. The lowest mark it's been all year for this group. Part of the reason for this new low this week is probably the delayed impact of interest rate rises on people with variable mortgages. It can take up to 3 months for a Reserve Bank interest rate to kind of lead to increased costs for someone with a mortgage. And therefore, people with a mortgage are likely only now feeling the pinch from the Reserve Bank interest rate increases in July and August. And as we know, there are several more to come. There's also been a big decline in consumer confidence for homeowners, down 18.2 points to 79.8, as home prices have fallen over the last few months. In contrast, consumer confidence for renters is only down slightly over the last few months, down 3.5 points at 86.2. Looking forward to next week, we now have to consider the Reserve Bank's decision to increase interest rates yesterday and how that will impact on consumer confidence, inflation expectations, and even voting intention. The Reserve Bank's decision to increase official interest rates by 25 basis points to 2.85% indicates that the Reserve Bank appears to believe it's done most of the work of raising interest rates already. And we can certainly see these impacts flowing through to the weekly consumer confidence results. The increase of 25 basis points means interest rates are now at their highest since May 2013, over 9 years ago. So, after another very eventful week with Treasurer Jim Chalmers' first federal budget and a higher than expected read on inflation, we have some mixed results. Despite the increasing inflation and increasing interest rates and concerns about the fragile economic situation, with consumer confidence down for 5 straight weeks, support for the government is holding up and even increasing. I encourage everyone watching now to subscribe free to our Roy Morgan YouTube for all of the latest political, economic and market research data and insights. Thank you for listening, and I look forward to joining you next week to see the latest results for consumer confidence, inflation expectations, voting intentions, and we'll also have the latest unemployment data for October. Take care, and we'll see you next week.